Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello everyone, welcome back to the channel. In today's video, I'm going to be discussing a put option that I was able to sell on Friday, which is expiring July 19th. So I'm going to talk about why I sold it, why I sold this put option, and how I was able to sell it. I'm also going to address a question that was made on my previous video from one of my viewers. So let's go ahead and do that first. Let's take a look at the question that was made. It's a really good question. So I encourage you, if you want to learn more about the wheel strategy or the stock market in general, do post some of your questions in the comments and I will address them in a future video. So the question here was made, what happens to option strike prices if Bitfarms triggers the poison pill and dilutes the shares? Would existing option strike prices be adjusted to new strike prices per dilution ratio? So this is a very excellent question, ladies and gentlemen. We're talking about the strike price of an option and the share price. So I'm going to talk about what causes dilution in a stock and how it affects the share price as well as the options chains. All right, so I'm going to discuss that as well in this video. So let's go ahead and do that first. So if a company does a stock split, right, that will cause dilution in their stock, okay? And I'm going to give you an example of when that happened recently. Excuse me. Walmart did a stock split recently. So let's go ahead and take a look at Walmart stock and see how the stock split affected their share price as well as their options chain, okay? So let's take a look at the history here. I do have a history with Walmart. I did buy and sell shares for a profit. But let's take a look at what happened on February 26th. February 26th, Walmart had a stock split of 3-for-1. So that means that for every one share that the company had outstanding in the market, they added 2 more shares to that number. Okay, so for example, if they had 500 million shares out in the market, right? So that would have caused this 3-for-1 stock split would have caused their shares that are outstanding in the market to triple, right? Because it's a 3-for-1 stock split. So if they had 500 million shares, well, their share count would now be 1.5 billion, the amount of shares that they had outstanding in the market, okay? So that is what the stock split would cause in the stock. But what would happen to the share price? Well, if the share price before the stock split was $150 per share, the 3-for-1 stock split would cause each share to be now worth $50, right? 50 times 3 is 150, right? So the share price would go down from $150 per share to now $50 per share. So the share price does go down on a stock split. Now, what happens to the options? Well, let's take a look at what happened to the options chain for Walmart after this reverse or after the stock split. Okay, so let's go ahead and look at the Walmart's options. And if you take a look at the stocks options, let's go ahead and take a look at the one from January 2025, because this will show us really what happened to the strike price for each option. Okay, so let's go to January 2025. As you can see here, there was an adjustment made to the strike price for the options, okay? As you can see here, there is some strike prices that is not in full dollar amounts, okay? And it's jumping from $70 to 73.33, right? And then $75 and then 76.67. So there's a lot of these strike prices that are not in full dollar amounts. So in this case, in this situation, the strike price was adjusted to the stock split, okay? And so if you had an options at this time, then that would have been adjusted as well, okay? So this is one reason why a stock would be diluted. When a company does a stock split, there'll be more shares outstanding in the market. The share price will go down, and the option strike price is also affected by this occasion, okay? But now what about what else could cause a dilution in the stock price? Let's talk about that now, okay? If a company does an at-the-market offering, right, in order to raise more capital for whatever reason that they need more capital, right? Either to grow the company or to stay in business, okay? So in this case, also there is dilution in the stock, all right? Let's take a look at another example of this with the shares of Bitfarms, right? Which is a company that we're trading at the moment. We're using the wheel strategy with this company. So let's take a look at an announcement that was made in March 8th with this company. They announced a $375 million at-the-market equity offering program. So they wanted to raise $375 million in capital in order to grow, right? In order to help their growth plans going forward. So let's take a look at what this means, okay? Look at this highlighted section here from this news article. Since the common shares will be distributed at trading prices prevailing at the time of the sale, prices may vary between purchasers and during the period of distribution. The volume and timing of sales, if any, will be determined at the sole discretion of the company's management and in accordance with the terms of the ATM agreement. To date, no common shares have been distributed by the company pursuant to the ATM agreement. So we see here in this situation here, the at-the-market offering was for $375 million of shares, okay? At the moment of this announcement, there hadn't been any sales yet, okay? See, to date, no common shares have been distributed. So no new shares have been issued at this moment, okay? So there's a period of time where this at-the-market offering is in effect. So within that period of time, that's when the company can choose to issue more shares at the market price, and the market price will vary, right? So if the company was if the share price of the company was $3.75, right? Then how many new shares would they have to issue? Well, they would remember it's a $375 million offering. So if the share price was $3.75, then they would only have to issue 100 million new shares. Okay. Now, however, if the share price was less than that, if the share price was $2, well, then they would have to issue closer to 200 million new shares of the company stock, right? So that dilution would be greater. Okay. So that does have an effect on the company's share price. The dilution in this case, as well as the other case that we mentioned during a stock split, will cause the stock price to go down, okay? However, it's not going to have an effect on the company's options strike prices, okay? Because the reason for that is we don't know exactly how many shares are going to be diluted into the market. So that's the reason why the strike price of the options will not be changed or adjusted in this situation, okay? In this situation, only the share price of the stock will go down, but the strike price of the options will not go down, okay? So let's take a look at that here. Since Bitfarms made the announcement. Now, we do know that Bitfarms, after this announcement, has issued more shares into the market. They have sold more shares and raised capital in this way for growth, right? As I mentioned in my previous video, and I'm going to put some of these videos up on the window at the end of this video so you can go back and take a look at that. But as we know, Riot Platforms, who has been trying to buy out Bitfarms, has bought a lot of those shares that Bitfarms has sold for the at-the-market offering, okay? They have bought a lot of those diluted shares. However, they have made money from this at-the-market offering by selling these shares and diluting it. Now, the share price has come down because of this, all right? But what has happened to the option strike prices? The option strike prices, as we can see here, has not changed at all, okay? It's still going from $3 to $3.50, $4, $4.50, $5, and so on, all right? This is the strike prices for Bitfarms. It has always been around, between 50 cents, all right? there has been 50 cents of strike prices on these options, right? 350, 450, $5. If we go out to January of 2025, we'll see the same strike prices. $3, 350, $4, 450, $5. So there hasn't been any adjustments made to the strike price of Bitfarms options since the at-the-market offering was announced, okay? So this type of dilution will not cause the strike price to change. The only effect that it will have on the company is on the share price, okay? Whenever they sell new shares, issue more shares into the market, well, then the share price will go down in price, okay? And that has happened, right? We can see as Bitfarms shares goes up, they issue more shares, they sell more shares into the market, and that causes the strike price to go down, okay? As we can see here, every time it goes up, they issue more shares, and then the share price goes down, okay? So this is one reason why share prices do go down in a company stock, because of dilution, okay? So that has occurred in this situation. Now, there is another reason why a company's stock will be diluted, right? More shares will be issued into the market. And Bitfarms has also caused this type of dilution with regards to the poison pill, okay? So with regards to the poison pill, if Riot Platforms buys more than 15% of Bitfarms stock, then Riot Platforms will get diluted. More shares will be issued into the market, and they will be distributed among the other shareholders. Okay, so Bitfarms is not going to make any money in this situation with regards to the poison pill. This is known as the shareholders' rights agreement, okay? So with regards to the shareholders' rights, if Riot Platforms does buy more than 15% of Bitfarms common stock, then the company will issue out more shares, which they will not be selling. They're not going to make money from this shareholders' rights agreement, okay? Just like they would with an at-the-market offering, right? With the shareholders' rights agreement, they're not going to be making money off of these diluted shares. In this situation, they will just simply be distributing these shares to the rest of the shareholders as a reward. Okay, so however, since the company stock is being diluted, the share price will come down. Okay, so in this situation, if Riot Platforms buys more than 15%, the share price will go up, and then Bitfarms shares will get diluted, and the share price will come back down as so. Okay, if Riot Platforms buys more than 15% again, then the share price, then the stock will get diluted again. The diluted shares will be distributed among the rest of the shareholders, and their share price will come down again. Okay. So in this situation also, the options strike price will not be adjusted. Okay. So the options strike price, it will remain the same as it has been. Okay. Between $3 and $3.50, $4, 4.50. So every 50 cents, right? Is a new strike price, right? So this will not affect the strike price, only the share price will go down, all right? So that is an excellent question made by one of the viewers on my previous video regarding the share price of the stock and the strike price of the options, all right? What happens to option strike price? If Bitfarms triggers the poison pill and dilutes the shares, would existing option strike prices be adjusted to new strike prices per dilution ratio? So that was an excellent question. I hope that I was able to answer that question and that you are satisfied with that answer. Okay.
Suggestion to buy, sell, or hold any asset. Please.
All right. Sorry about that. Okay. So now let's talk about the new put option that I sold on Friday. Okay. As we can see on Friday, the share price of Bitfarms did go down. Okay. As you can see here, it went down to $2.80, 87 cents. It went down to $2.85. So it did go down a few times. Okay. And in fact, I think the lowest it went to was $2.85, right? As we can see here. The lowest that it went to on Friday was $2.85. Okay. So I did mention in my previous videos as well that I wanted to sell another put option, another $3 put option on Bitfarms if the share price went below $3 again. So as we can see on Friday, it did go down below $3 again, right? It did it like 3 times at least. Went really down to $2.85, right? So on Friday, I was able to sell another put option for a $3 strike price. And it looks like that really was a good a good option for me, right? Because as we can see towards the end of the day, Bitfarms price went back up and actually closed at $3.07. All right. So I was able to take advantage of Bitfarms share price falling below $3 and sell another $3 put. Okay, let's go ahead and take a look at that option that I saw. It's the one right here, as you can see, expiring on July 19th. Okay, now let's talk about why I decided to sell this put option expiring July 19th. But first, let's go ahead and see how much I sold it for. Okay, so as we can see here on my history, June 21st, which was a Friday, I sold this $3 Bitfarms put expiring July 19th for $40. So I made $40 from this option. Okay. So what this means is, as we can see here, let's go ahead and take a look what this means. Okay. So let's go to that option, which is expiring July 19th. All right. And it's a put that I sold. Right. As you can see, I have it right here. Okay. So what did I have to do in order to sell this put option? As you can see here, it says right now it says you don't have enough buying power to place this order, and that's true. Okay, so we're gonna disregard that for the moment. But on Friday, when I did have enough funds available to sell this option, what this basically said was that I am agreeing to buy 100 shares of Bitfarms for $3 a share. So that means that I would need to have $300 as collateral. Okay, you see here collateral is $300. Okay. So which I did. On Friday, I did have the $300 as collateral. I was able to sell this put option, okay? So the put option was sold for the $40 strike price. So let's go back to my history here. We don't need to talk about this anymore. So I was able to sell it for $40, okay? So what that means is I put $300 as collateral in order to buy the 100 shares. I was paid $40 for that contract that I sold, okay? And so that means that I would really have been buying the 100 shares for $260, okay, for $260, since I'm receiving these $40 right now. Okay, when the contract expires on July 19th, I will either be buying 100 shares for $300, right? Or I'll be getting my $300 back from collateral and keeping the $40 that I made from this contract, okay? So I'll be buying the shares for $300, but I got paid $40 already. I'm collecting my profit up front, ladies and gentlemen, okay? When I sell options, I collect my profit up front. So I got $40, so I'm really paying for these 100 shares $260 if I am assigned the 100 shares on July 19th. Okay. So that is what this option means for me. Okay. So now how was I able to sell this option? I haven't invested any more money into the stock market since last week. Okay. So how was I able to sell this option? How did I put up the money for collateral? Well, because I've been saving the money that I make on passive income, I've been saving it here in my buying power. Okay. So on Friday, I had more than $134 in my buying power, right? From the options that I have sold before. I had close to $400 here. Okay. So I was able to use the passive income that I've made in the past to sell this new put option right here, expiring July 19th. Okay. So that is how I sold this put option. So as you can see, the money that I'm making in passive income now, I'm using that money to create more money. So that is causing the interest that I have to compound. All right. So when you invest in the stock market, ladies and gentlemen, you want your money to continue to grow over time. You want that interest to continue to grow over time. That's what's called compounding interest, right? So every time I sell a premium, it's going to show up here in my buying power. And the more money I make in passive income, the more contracts I'll be able to sell, the more options I'll be able to sell. Okay, so that's causing my interest to compound. All right, ladies and gentlemen. So that's why even though Bitfarms does not pay a dividend to its shareholders, I'm still able to receive income from selling these options right here. Okay, so my interest is still being compounded every month, every week. All right. So now, however, why did I sell this option expiring July 19th? Well, the reason I chose the July 19th expiration date instead of the August 16th expiration date, because the August expiration date would only have paid me around $50. So only $10 more. However, I would have had to have my $300 in collateral for a whole nother month, right? So I didn't think it was worth it to hold my $300 for a whole nother month just for another extra $10, okay? Another reason is because the month of July now, it looks like it's going to be very low. It's looking like it's going to be very low when it comes to the amount of passive income that I'm going to be able to make in July. All right. August, I have 20 contracts expiring in August. So August is going to be a good month for me for making passive income. All right. All the money that I've made here, as you can see, selling 20 contracts in August, I'm going to be able to sell another 20 contracts, right? When these contracts expire, I'll be able to sell another 20 contracts in the month of August. Once again, compounding the amount of income that I make each month. Okay, the amount of interest that I make on my cash each month. All right. However, the month of July, I only have 2 contracts that are expiring in the month of July. And I've used the passive income that I've made in order to sell these 2 options. All right. So for the month of July, the passive income that I'm going to be able to make is going to be very, very low. It doesn't look like I'll be able to make a lot of passive income in July, right? When this option that expires next Friday, right, uh, ends, when it expires, then I'll be able to sell another option, right? Because when this option on Blackberry shares, when this option expires next Friday, I'm either going to own 100 shares of Blackberry or I'm going to receive my $250 back from collateral. So the week after that, which is July, I'll be able to sell another option. It's going to either be another put option or I'll be able to sell a covered call because I was assigned 100 shares from Blackberry. Okay. So that's only one option that I'll be able to sell in July. Now, this $3 put, which is expiring July 19th, if by July 19th, Bitfarms shares is above $3 or stays above $3, then I'll get my $300 back from collateral and I'll be able to sell another put option. But if I'm assigned 100 shares of Bitfarms because Bitfarms share price falls below $3, then I'll own another 100 shares of Bitfarms and I'll be able to sell a covered call on those 100 shares. So either way, I'm only going to be able to sell two extra options for the month of July. All right. So that's all. Just 2 extra options for the month of July. So it looks like the month of July is going to be very, very low when it comes to the amount of passive income that I'm going to be making. All right. However, August, right? I have 20 contracts expiring in August. August is looking like a good month. So look for August to be the month where I pass the $363 that I made last month in May in passive income, right? That's right. In May, I was able to make $363 in passive income. That has been the biggest amount of passive income that I made in 1 month, right, was in the month of May, $363. Now for the month of June, which is going to be ending next week, I was only able to make, let's see here, 295 plus 28. I was only able to make $323 in passive income for the month of June. All right. Barring any unforeseen occurrence where, let's say, next Thursday, I invest another $300 into the Robinhood account and Bitfarms falls to below $3 again. Well, I might be forced to sell another put option at that point. So $323 is not I mean, I still have one more week before June ends, so I could still make more passive income this month. All right. So the goal for next week, if I do end up selling another put option, I'm gonna be looking to sell another one of these July 19th $3 put options. All right. For the reason that I want to have another opportunity to sell another put option in July. Okay. I want to be able to make more passive income in July. So for next week, the goal is to sell another put option if Bitfarms share price falls to below $3. Okay, I'm going to be looking to sell another one of these $3 puts expiring on July 19th, right? But if it doesn't fall below $3, I mean, I'm still going to invest $300 into the Robinhood account because I do have to replenish the $300 that I used in order to sell this put option here, this put option that I sold on Friday. So I still have to invest $300 on next Thursday in order to replenish my passive income that I used. All right. So that's the goal for next week. All right, ladies and gentlemen. So once again, if you do have questions, you can post them on the comments and I will be sure to address it in a future video. Okay, I hope that you are benefiting from these videos and that you are able to save money, right? Making passive income and also not only save money making passive income by selling puts and calls, but also by making capital gains. All right. So these are the three ways that I'm making passive income by using the wheel strategy. Okay. Let me show you what that means. Okay. So I make passive income, all right, by selling puts, selling these puts, and selling these calls. Okay. And every week I try to sell a new put or call. Well, actually, every week I try to sell a new put because I invest more money into the stock market. Okay, so it has been going up every month. Okay, I'm now able to sell up to 20 contracts. Right, I currently have 22 contracts. Right, that are out there that I have sold. So that is going to go. That's going to grow. That's going to continue to grow every week. All right. So that is one way that I make passive income, selling puts. Another way is selling these calls here, right? When I own 100 shares of a company, then I'm able to sell the cover call and make passive income there as well. Okay. Now the third way that I'm making passive income, when I finally do end up selling the shares, when my shares do get called away, and I'm selling them, I'm going to be selling them for a capital gain. As you can see right here for my total returns, I'm currently at a capital gains of $647 on the 1,200 shares of Bitfarms that I own right now. Okay, my cheapest strike price on Bitfarm stock, as you can see here, is this $3 call that I have right here. Okay, so this $3 call, that means that, and I have two of these contracts out expiring in August. So that means that 200 of my shares could get called away for $3 a share. So that means I'll be making $600, okay, on shares that cost me. How much did these 200 shares cost me? Well, if you take a look at my dollar cost average, it only cost me $2.53 per share or $506. So I'll be making $600 on shares that cost me $506. So that's another $94 capital gains that I'm making on those shares if my shares get called away at that for that on that contract. Okay. So Once again, 3 ways of making passive income. Selling puts, right, to buy stocks for a discount. Selling calls to sell in order to sell stocks for a profit. And the capital gains, once I sell the stocks, once my shares get called away on one of the contracts, that is when I collect the capital gains. All right. 3 ways of making passive income. So I hope that you're able to benefit from these videos, ladies and gentlemen. Let me know if you are able to save money, and make passive income just like I am doing, right? I hope that you're not just watching these videos and watching me make money. I hope that you're also able to make some money. Let me know if there is a stock that you are interested in, a company that you are interested in investing in, and I'll be able to help you see which options you'll be able to sell of those companies, all right? I do have a lot of companies that are in my let me see here. I have a lot of companies that I'm interested in using the wheel strategy with. All right. I haven't made too many videos on these, but let me take a look. Let me show you. Let me see. I want to show you. Okay, here we go. These buy stocks. Okay. I have other companies that I'm interested in using the wheel strategy. I have about 42 different companies that I'm interested in using the wheel strategy with, as you can see here. All right. There's I have talked about JetBlue before. Okay. Their share price right now is 573. That's not bad. Okay. But there's a lot of companies here. As you can see, the share price it varies. $1.67. Okay. Lucid 248. AMC. AMC is also a meme stock, so I want to be careful with that stock. I'm really staying away from that stock right now at the moment. Okay. Rocket Lab. If you don't know about Rocket Lab, it's a company that is trying to make rockets to go into space. Right. New York Community Bank, $3.09. So this is another company that you could wheel if you're interested in banks. All right. This is Sirius XM. I'm sorry about that. I'm blanking out here. It's really late right now, but yeah. So I do have Siri here on the buy view here, $2.86. That this could be a good company to wheel in the future, right? If it stays at that price. Okay. So as you can see, I have a lot of companies here. So if you're interested in other companies to wheel, let me know in the comments and I'll take a look at it for you, see if it's worth it, to see if what is the reason why that share price has fallen so low, right? What does the balance sheet look like, right? Do they have more debt than assets? These are the things that you want to be looking at when you choose which companies to invest in. You don't want to choose a company that's going to be gone in a year, okay? It's going to be end up being bankrupt in a year. You want to choose a company that has the potential of bouncing back from coming down to as low as $1, okay? $1 per share. You want to make sure that it's a company that's not going bankrupt, but that it does have the potential to bounce back, all right? So these are the companies that you want to look at when it comes to using the wheel strategy, all right? And also another thing you want to look at when you choose a company to invest in and to use the wheel strategy with, okay? You want to look at a company that is trading every week, trading options every week, all right? So like, for example, Bitfarms, if you go back to Bitfarms here, the Bitfarms options chain, you can see that they have options trading every week, June 28th, July 5th, July 12th, July 19th, July 26th. So they have options every week. People are interested in buying or selling these options every week. So that's what you want to look at when choosing a company to use the wheel strategy with. Do they have options trading every week? All right. You want to make sure it's a company that people want to buy. All right. Take a look at the future. Do people think that the stock price is going to go up? Take a look at some of these future option strike prices. Okay. See over here, I was able to sell 6 contracts for the $5 strike price. That means people believe that this company is going to go up. All right. They believe that it will go up to as much as $7.50 by August. There are people who believe that this stock will go up to $7.50 by August. All right. How about in January 2025? Same thing. There are people who believe that this stock price could be up to $5.50 by January 17, 2025. So you want to look at those things when it comes to choosing a stock to use the wheel strategy with, all right? And that way you'll be able to make passive income every week, not only selling puts and calls, but also with the capital gains, right? So this is what you want to look at when choosing a company to invest in. All right, ladies and gentlemen, once again, I hope that you were able to benefit from these videos. Leave me some questions in the comments so I have more to talk about in my future videos. Let me know if you are benefiting in these videos by saving money, investing in the stock market yourself. I want to hear some of your stories, all right? So I hope that you have a great week next week, and I'll see you in the next video. Until then, as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.